Good morning.
Good morning. Good morning.
Sorry, I'm a little late. Give me 2 minutes. Let me get to my lecture notes. Okay. Okay, welcome to Accounting 335. How are we doing this morning? Are we there? Good morning. Today we're going to talk about Chapter 8. Chapter 8, Audit Planning and Materiality. And let me just turn my video on.
Professor, can I speak to you after class? I sent you an email, but I got no response.
In regards to?
The exam?
Okay.
Thank you.
Chapter 8, Audit Planning and Analytical Procedure. What is audit planning? Anything we do in life, we have to plan. For it to be executed efficiently, there has to be a good plan in place. Think of this as going back to pre-COVID. If you're leaving your home to get to your college, there are several ways that you could get there. However, some routes are efficient, others may be not as efficient. They may be lengthy, there may be a lot of traffic in those routes. So for you to get there in a very efficient manner, you will choose the most efficient route. You have to plan your trip. Likewise, in doing an audit, we have to plan the audit. What does planning entail? Planning entails mapping out the most efficient strategies. Now, what are some of the things we're going to talk about today? We're going to discuss why adequate planning is essential. How do we make client acceptance decision and perform initial audit planning? How do we gain an understanding of the client business? You're meeting the client for the first time. How do you understand the business? Assess client business risk. We'll talk about perform preliminary analytical procedures. What are analytical procedures? Analytical procedures, we're looking at relationship among data. We'll talk about the purpose of analytical procedure and the timing, when to perform them. And we'll select the most appropriate analytical procedure for among the 5 major types. We're going to talk about what are these 5 major types, and we'll talk about computation of common financial ratios. Why adequate audit planning is essential. Again, for the audit to be performed in an efficient and effective manner, we must plan it properly. Planning is required by the standard of fieldwork. The first standard of fieldwork says that we should have proper planning and supervision. So the main reasons for planning is to obtain sufficient appropriate evidence for the circumstances, to help keep audit costs reasonable, because if we select the most efficient method of doing something, the cost will be lower, and to avoid misunderstanding with the client. Think of this. If you're going on a date on Saturday night, you're taking someone out on a date. You'll want to properly plan your date to make sure that all the objectives are met. What are the objectives of your date? Well, if you're going out on a date with someone, you want to have a good time and you want to make sure the other party have a good time. Because if you both don't have a good time, the date would not be successful. So before you go on your date, you will have to find out what the other party like to do. You may call them and ask them. You may ask their friends, right? What they like to do. All of this goes into planning. Once you decide on what they like to do, and you may even call them and ask them, hey, what you like to do, what you like to eat, what are some of the things that you have fun doing? Then you will plan your evening of entertainment. By doing that, you're not wasting time, you're being efficient, and you maximize your enjoyment out of the evening. It's also avoid any misunderstanding you will have with that person, because if they think you're going to the movies and you want to go see the next game, then it may be some problems, because not all ladies enjoy the Knicks games. Even some guys don't even enjoy the Knicks game, right? So you want to make sure that you're doing something that both of you enjoy. The same way you plan a date, the same way you plan an audit. You're meeting the client for the first time. You know nothing about their business. Well, you want to obtain an understanding of their business. Once you understand the business, you know what are the things you have to do to obtain sufficient appropriate evidence. You want to lay out when and what procedures you're going to perform. What are some of the things that you're going to do? What are the some things you expect the client to do? And by doing that, you avoid any misunderstanding with the client. You don't want to get there and the client is not prepared. You want to let them know ahead of time, hey, these are some of the things I'm going to need when I get there. All of that are involved in planning the audit. The main reasons for planning: accepting client and perform initial audit planning, understanding the client business and industry, assess the client business risk, perform preliminary analytical procedures. These are all the things we're going to talk about in this chapter, chapter 8. Set materiality and assess acceptable audit risk and inherent risks. That's what we're going to talk about in chapter 9. Understanding internal control and assess control risk. We'll talk about that in chapter 11 and 12. Gather information to assess fraud risk. We'll talk about that in chapter 12. And develop the overall audit plan and audit program. That's what we talk about in chapter 13, if we do get there. Generally, we do not get to chapter 13 sometimes. So let's see how we roll out the rest of the course. So the terms that we have to know when we talk about risk: acceptable audit risk. How willing is the auditor to accept the fact that although they do a proper audit, the financial statement may still be misstated. The second risk is the inherent risk. In anything that we do in life, there is inherent risk. The risk that is there before we put any control in place. The risk, if I'm going to travel from my home to your college, there's a risk that I get into an accident. Now, I could make that risk smaller if I travel safely, or I could make it larger if I travel recklessly. Make client acceptance decisions and perform initial audit planning. Now, when you read the text, you tend to believe that these are steps you do. They are actually steps you do, but they may be very overlapping. A client calls you, they want an audit. You immediately start planning the audit. Now, first you want to decide, is it an engagement you're going to accept? You're going to ask the client their reasons for the audit, what type of company they have. If they're going public, then you have to decide, am I competent to do that audit? To audit a public company, you must be a member of the PCAOB, and you must understand the SEC rules and regulations. If you don't, then you should not accept that engagement. If the client is getting a bank loan, well, you may want to accept the engagement if the client is in the industry that you're familiar with. If not, then you're going to want to make sure that you study the appropriate literature and gain competency in that area. So initial audit planning, decide whether to accept a new client. Important factors, competence on you, the part of the CPA, independence on you, the part of the CPA, client ethics. Is the client ethical, or are we dealing with the mafia, right? Is the client ethical enough to fit into your type of practice? Continuance of new client. Should I continue that client? What are some of the factors that goes into continuing new client? Your experience working with them. Are they ethical? Do they follow GAAP in preparing their financial statement? Are there any major disagreements within the client? Do they pay their fees on time? 2, identify client reasons for the audit. Again, go back to what I said in 1. If they're looking to go public, you want to determine, am I competent or not? Why do they need the audit? Do they need an audit, or should you give them a lesser opinion? For example, a compilation or a review. Obtaining an understanding with the client. Generally, once you decide to accept the client, then you will obtain an understanding with the client. When the audit will start, what are some of the things you have to do for the audit? What are some of the things the client have to do for the audit? And you will document your understanding in what is called an engagement letter, which is your agreement with the client stating that you will be performing an audit, when the audit will start, when it's expected to finish, what are some of the things that they have to get for you, how much your fees are going to be. Once you've done all that, now you decide to do the audit and you get an engagement letter, which means you're now doing the audit, then you will develop the overall audit strategy. How are we going to approach this audit? Who's going to do the audit? What staff are we going to assign to the engagement? When we're assigning staff, we want to make sure that the staff are independent and that they are competent. Client acceptance and continuance. New client investigation. If the client had an audit done before, the new auditor is required to communicate with the predecessor auditor. The client must give permission for the new auditor to communicate with the predecessor auditor. So you will seek that permission. If it's a continuing client, every year the firm will evaluate whether to continue with clients based on issues, fees, and client integrity. Sometimes you have a client that you don't want to continue, and you will let them know that, hey, I do not wish to continue this relationship with you. Right? Identify reasons for the audit. Two major factors affecting acceptable risk. One is the likely statement users. If a company is going public, it becomes a much more riskier audit. Why? Because when a company go public, they generally raise millions of dollars. And if they're raising millions of dollars and you're giving an opinion on that financial statement, your potential lawsuits could be millions of dollars. Also, when companies are going public, they have to meet certain earnings requirements. And management, if they fail to meet those earnings requirements, may tend to overstate the financial statement to get there. You also want to know who the intended users of the financial statement. Are they getting a $200,000 bank loan or a $2 million? Or it's just a regulatory requirements for them to file their statement? Generally, if companies are publicly held, you want to acquire more evidence because the risk of exposure is much more. If they're extremely indebtedness, you want to acquire more information and do a more proper audit. If they're likely to be sold. So I think if you got a car and you're selling it, you will polish it up and make it look nice, right? Likewise, when you're dealing with a company and they want to sell it, they will try to make it look nice. And one way to make it look nice is to make the financial statement look nice. So they tend to be a little aggressive on their financial statement, which will increase your risk exposure. Obtaining an understanding with the client. The engagement term should be understood between the CPA and the client. How much you're going to charge, when you're going to start, when you expect to finish, what the client have to get for you. You will document that in the form of an engagement letter describing the objectives, the responsibility of the auditors and management, schedules and fees. You'll inform the client in that engagement letter that the auditor cannot guarantee all acts of fraud will be discovered. And then you will develop your overall audit strategy. Preliminary audit strategy should consider the client business and industry, the material misstatement risk areas, the number of client locations, the client effectiveness of internal control. If controls are strong, you're expecting to have less errors and irregularities. If controls are weak, you're expecting to have more errors and irregularities. We'll talk more about internal control on chapter 11 and 12. Your preliminary strategy helps the auditor determine resources, requirements, and staffing. How many staff I need for the audit? Do I need a specialist? Is the client in a highly specialized industry, or they have specialized material that you need to count? Then you will need a specialist. Gain an understanding of the client business and industry. Now, a lot of these things where we talk about gain an understanding, not only are you going to do it for an audit, I do this for every client pretty much. A lot of this I do for every client. You assess the client business risk. The client business risk is the risk that the client will fail to meet its objectives. Right now, as we are looking at COVID-19, some clients will fail to meet their objectives. Some clients will go out of business, especially in the restaurant industry. Declining economic condition could affect the client. Information technology could affect the client. Global operations, human capital. Like right now, if you look at the low end industry, especially restaurants and so on, they're having problems obtaining human capital because people who are working for $10 to $15 an hour prefer to stay home and collect unemployment than to go and work. And I don't blame them, right? I do not blame them. Strategic system understanding of the client business and industry. Understanding the client business and industry. What industry the client is operating in, and what are the external environment that affects that industry? The client business operation and processes. How does the business operation and processes function? Management and governance. Who is involved in management and governance of the organization? What are some of their objectives or strategies? And how do they measure their performances? Now, not only for audit clients I do this for most of my clients. If I get a new client, I'll go out and tour their facilities. In touring the client facilities, you meet all the upper level of management. You understand their business, how it operates. You understand how things are done. You understand how procedures are done. You understand how policies are initiated. You understand what internal controls are in place. Also, you build some relationship with the client. Because when you go out there and tour their facilities, they believe that you are very interesting in their business more than the other accountants. And you're showing them that you have a strong interest in their business and the organization. Whenever you got a client, you should show some interest in what you're doing because that's your business. Industry and external environment. Reasons for obtaining understanding of the client industry and the external environment.
Professor?
Yeah.
Are you supposed to be sharing your screen?
Am I supposed to be what?
Are you supposed to be sharing your screen?
Am I supposed to be what? Sorry.
If you're sharing your screen, we cannot see the screen.
You're not seeing the screen?
No.
Oh, yeah. You should be seeing the screen. Hold on. Thank you. Thank you for that. Let's see. Maybe I'm not sharing my screen.
I'm seeing you, Professor.
Are you seeing the screen?
Yes, I am. I'm seeing you.
Now you're seeing him, but you're not seeing the PowerPoint.
No, you should be seeing the PowerPoint. I'm not that handsome like the PowerPoint.
The entire
PowerPoint
class, we haven't been seeing the PowerPoint.
It's much better looking than me. So let's see. Let's see how we get. Let's go back and see how we get. Okay, here we go. I didn't share my screen. My apologies. Good. Can you see my screen now?
Yes, Professor.
Yeah, we see it now.
And it's better looking and much more informative than me. Okay. Sorry about that. And by the way, whatever I'm lecturing from is also on, I'm lecturing directly from Blackboard. So this screen is directly on Blackboard. If you go to the weekly assignment for chapter 8 and the PowerPoint presentation, that's where you can follow me there also. So if for some reason I forgot to share my screen, you can follow me there. Okay. Okay. Thank you for that objection and to let me know, because I don't, I'm seeing myself here, but I'm my screen, but you're not seeing it. So it's good that you see it also. All right, back to the lecture. So reasons for obtaining understanding of the client industry and external environment. There may be risks associated with specific industries. You want to understand what those risks are, how those risks affect our audit, or how they're intertwined with the audit. There are some inherent risks that are common to all clients in certain industry. Like right now, I said in the restaurant industry is suffering because of COVID-19. Right? Instead of a restaurant that generally have 100 capacity, at some point had to close, at other point had to be at 25%, at other point 50%, capacity, so they're losing business. Not only that, people are not going out as usual. My father refused to go out until last week. We managed to get him out to a restaurant for dinner. So people are averse to going out. And those people who used to go out a lot, like myself, we don't go out as much. So the inherent risk common to all industries. Right now, the risk that's there is common to a lot of industry, not just restaurants. And also there may be some unique accounting requirements that you must understand. So it's important to understand the client industry and business. Something that's not mentioned here. When you take the time to understand the client industry and business, you show interest in the client business and you're building that relationship from a marketing point of view. You're cementing that relationship with the client. That have nothing to do with audit, but it does have a lot to do with doing the client business, right? And to get repeat business from client, you must build that relationship. Likewise, when you guys graduate and you're looking for your first job, those of you who build a lot of good relationships with professionals will find an much easier time getting that first job, because people like to go with what they know. We do not like to go with the unknown. We always prefer the known over the unknown. Factors the auditor should understand. What are some, and this is not only common to audit. In any business you are dealing with, you should understand these factors. What are the major sources of your revenue? Who are the key customers and suppliers? If you're working in a business outside of audit, you want to understand this. What are the sources of financing? Each and every one of you will probably at some point in your life work for an organization in an accounting capacity. You want to understand these. Information about related parties. Who are the owners? Who are the creditors, the major creditors? Who are the upper level management? You want to understand who these folks are. You may take a longer time to understand it if you're an employee, but if you're an auditor, you want to understand that on the onset. You want to tour the client plant and facilities. It enables you to overview the accounting policies and procedures and look at the safeguard that interpret accounting data related to assets. You're looking at their internal control while you're touring. You're meeting management while you're touring. Years back, I did an audit in Livingston, New Jersey. And when I went out there to do the audit, my very first day, I realized how different I was than everybody else there. I was the only dark person in the entire company, and I'm doing the audit. And the very first day, I did not do any real accounting work. I just meet with management. I tour the facilities. They take me around. They introduce me to all the players. And they built a very good relationship with everyone there. Why? Because that will enable whatever I need to do after that. And after that, the rest of the audit becomes very easy because they all thought that I'm their friend and they want to make sure I look good. So whatever I ask for, they get it to me promptly. When I left there, a year later, I went back to do the audit for a second year. Everybody there knew me. Everybody was asking for me. Everybody was looking forward for me to show up. That's the type of relationship you want to cultivate with your client. Because if they like you, they want you to be there, they're looking forward to seeing you, then you will get their business. And the firm have their business as long as I was a consultant with the firm. As soon as I leave the firm, the business went. As professionals, as accountants who are aspiring to be CPAs, we want to develop good relationship with people. Not only develop good relationship because these people will give me business. No, you want to develop good relationship. You don't know who's going to give you business. You don't know where your business is coming from. But the more good relationship, it's a number of games, the more good relationship you have, the better your chance of developing good business. One mistake I made in my life that you shouldn't make. When I was in college, I was too much of concentrating on the books. I wasn't into developing long-term relationship. Now it worked well for me. When I got out of college and I started my practice, the few relationship I had in college gave me some good business. Had I developed very good relationship in college, it could have led to a lot of business for me. So good relationship can always work to your benefit, even if you're not going to be a CPA, practicing CPA like myself when I did. But if you're looking for a job and you have good relationship with people, they could help you. They could share your resume with a potential employer. So relationships are very important. When you target the client company, you want to identify affiliated companies that they may have, who are the principal owners of the client, any other party which the client deal with, any party who could influence management or client policies. These are all related parties. In financial accounting and GAAP, you have to disclose the terms with the related parties. Management and governance. Governance include organizational structure, board activities, the audit committee activities. Audit committees you're going to find in these large public companies. The smaller companies may not have audit committees. Governance insight, the corporate charters and bylaws, the code of ethics, the meetings of minutes. You want to review all the meetings of minutes because it will tell you what are the major decisions that are being made. When I was doing audit and I go to the company, the first thing I ask for are the minutes of the meetings. And I'll read the minutes of the meetings and I will know what to expect in the financial statement. And I will come and discuss the staff. Hey, and they want to know how I know. Well, I know because I read the minutes of the meeting. That's where all the important decisions are made by management. How is that new product working out for you guys? What new product? And I'll tell them what the new product. Oh, I didn't know that you know about that. Right? It makes you look sharp. It makes you look smart. And then management establishes strategies and policies followed by the client businesses. So you want to understand the management side of things, right? The minutes of the meeting will have all the important discussions, will have all the important policies that are adopted. If they're into a new brand or a new product, it will be discussed there. Code of ethics. In response to the establishment of the Act, the SEC now requires, Security and Exchange Company requires each public company, every public company, which are the majority of the companies you're seeing out there, to disclose whether it has adopted a code of ethics that applies to senior management. So the SEC now wants every company to apply a code of ethics, to adopt a code of ethics for senior management. They want the companies to disclose amendments and waivers of the code of ethics. They also want the senior management to sign off on the financial statement. So not only the auditors have to sign off and certify, but the senior management must also. Client objectives and strategies. What are strategies? Strategies are the approaches followed by the entity to achieve organizational objectives. We should understand those objectives. What are the objectives of the client? Well, maximizing profits will be one, but there'll be other objectives. How reliable is their financial reporting? The effectiveness and efficiency of their operation, which have to deal with their internal control, and their compliance with laws and regulations. In chapter 11 and 12, we're going to talk about all of these, their internal control and the compliance with laws and regulation. How do they measure performance? Their performance measurement system includes key performance indicators, what their market share. You hear they talk about their market share. The sales per employee, the unit sales growth, the website visitors. The website visitors translate, there's a relationship between the visitor to their website and their sales. The same store sales, the sales per square footage. The performance measurement also include ratio analysis and benchmarking against key competitors, how they are performing alongside their competitors. Assess the client business risk. And we define business risk as the risk that the client will fail to achieve their objective. What are the auditor's primary concerns? The ethical primary concern are material misstatement in the financial statement due to client business risk. So we want to understand what these business risks are and how they translate and affect the financial statement. Client business risk and risk of material misstatement. We want to understand the client business risk. We want to assess the client business risk and assess risk of misstatement in the financial statement. And we're not concerned with all misstatement, but material misstatement. What do we mean by material misstatement? We mean those misstatements that will influence the user decision. So we say that a misstatement is material. We're saying that it will influence the user decision. Now, when we're understanding the client business and industry, we are looking at the industry and external environment, their business operation and processes, who are the management and the governments of the organization, what are their objectives and strategy, we talked about this earlier, and how do they measure performance. The Sarbanes-Oxley Act, management must certify it has design disclosure controls and procedure to ensure that material information or business risk is made known to them. Management must certify it has informed the auditor and audit committee of any significant control deficiencies. Not only that, they must also certify the financial statement, as I discussed earlier. Perform preliminary analytical procedures. When you're talking about analytical procedures, what are analytical procedures? Analytical procedures, we're looking at relationship among data. We're comparing 2018 income statement with 2019 income statement. That's an analytical procedure. We're comparing 2017 net income with 2018 with 2019 net income. That's an analytical procedure. We're doing what is called a trend analysis. We're looking at the trend of net income. We could also do what is called a vertical analysis. We're comparing net income as a percentage of cost of goods sold or as a percentage of revenue. That's a vertical analysis. That's also an analytical procedure. In accounting 101 or 102, we talk about financial ratios. Those are all analytical procedures. Preliminary analytical procedures. We're comparing the client ratio to industrial competitor benchmark, provide an indication of the company performance. What is net income common to this industry? How is the client net income compared to the average net income in that industry? These preliminary tests can reveal unusual changes in ratio. And when there are unusual changes, we want to understand why it changed. It could be errors, it could be irregularities, it could be that the company is just performing differently. So that's why we want to. Analytical procedure do not pinpoint errors by themselves, but they indicate the presence of errors or irregularities. They point you to directions where things may go wrong. You have to use other evidence gathering procedures to determine if things actually gone wrong. examples of planning analytical procedures, and you could go through that. Some of these ratios we talk about in accounting 101 or 102, the cash ratios, the quick ratios, the current ratios, etc. These are all the financial ratios you talk about in your financial accounting. I'm not going to go through them in detail. Summary of parts of auditing planning. Major purpose is to gain an understanding of the client business and industry. Planning the audit and designing an audit approach, we want to set materiality level and assess acceptable audit and inherent risk. What amount are we going to consider material? What amount will influence the user decision? When we look at materiality, it is a relative as well as an absolute concept. You're looking at the amount and the circumstances under which it occurs. An amount can be small, but the circumstances under which it occurs can make it material. We want to understand internal control. Chapter 11 and 12, we talk about how we understand internal control and assess control risk. How do we assess control risk? In those chapters, we also talk about gathering information to assess fraud risk. And then we'll develop the overall audit plan and audit strategy. State the purpose of analytical procedure and the timing of each procedure. They may be performed at any time during the audit. They're required in the planning phase. They're often done in the testing phase, and they're required in the completion phase. Timing, pretty much they can be done throughout the audit, before, after, at the end. But they require the planning and at the completion phase. The most appropriate analytical procedure from the 5 major types. What are the 5 major types of analytical procedure? One, industry data. We'll compare the client data with the industry data. We compare the client net income with the net income that is the average for that industry. Or 2, we could compare the client data with similar prior period data. For example, I said compare 2019 net income statement with 2018 income statement. Compare the client data with client determined expected results. What are client determined expected results? The client budget. The client budget is the predetermined expected result. How does the actual compare to the budget? 4, compare the client data with the auditor determined expected results. Where does the auditor determined expected results come from? Well, based on your prior engagement with the company, you know certain things to expect. How does the current year compare with your expectation? 5, comparing the client data with expected results using non-financial data. What is that all about? Well, let's take a small hotel. We are auditing a small hotel. If you want to determine their revenue, without even going to the premise and looking at their books, we could ask them some questions. How many rooms do you have? What's your average rate per room? What's your average occupancy rate per day? And we could multiply those and come up with revenue per day, and multiply by 365 and come up with the revenue per year. That's the expected revenue that we will have for the year. So the expected results using non-financial data. Come on. You just woke up. Say hi. You didn't see that after mine. You left your clothes. Say hi. So the expected results using non-financial data. We're not looking at the financial statement. We are not looking at the client information, but we know what to expect before we get there. Okay. Good, Mama. Well done. Okay. And here they give you some examples. Okay. Internal comparisons, they give you some examples. Ratio or comparison, what are the possible misstatement? Raw material turnover for a manufacturing company. Misstatement of inventory, you could just look through those. I'm not gonna go through them. But item 8, compute common financial ratios. And you did this in financial accounting. You could compute the quick ratio, the current ratio. You have the short-term debt paying ability, liquidity ratio, the ability to meet long-term debt obligation, the profitability ratio. And they give you, I'm not gonna ask you to compute these ratios, but you need to know what they are. Cash ratio, quick ratio, current ratio. They're looking at short-term debt paying ability, liquidity activity ratio, accounts receivable turnover, days to collect receivable, inventory turnovers, days to sell inventory. Okay? You must know what these ratios are. Again, not for auditing, not to compute them, but for financial accounting, you need to know how to compute them. Ability to meet long-term debt, debt to equity, time interest is earned. Profitability ratio, earnings per share, gross profit percentage, profit margin. Profitability ratio, return on asset, return on common equity. You need to know how to compute them for financial accounting, but you need to know what they are for auditing. Compare ratios of recommended amount to auditor expectation. Used in planning and understanding client business and industries. And they're used throughout their audit to identify possible misstatement, to reduce detailed audit tests, to assess going concern issue. So analytical procedures are not conclusive in themselves, but are widely used in auditing because it points out those areas where there may be problems. And you need to use other audit procedures to identify if there is actually a problem or not. Okay, and that concludes chapter 8. I see you all on Tuesday, and we'll talk about chapter 9. We're not going to cover all of chapter 9, just a small part of chapter 9, and I'll let you know what that is. Our Tuesday lecture should not be a long lecture, it should be a short lecture. All right?
Professor, don't forget I need to speak with you.
No, I didn't forget.
Thank you so much.
Have a nice
Yep.
weekend, Professor.
You guys have a wonderful weekend. Let me stop sharing my screen. So enjoy your day, enjoy the weekend.
Yeah, Professor,
And
I have a question to you.
go ahead.
So do we in our final that will be between middle of the May or
If the
like
final will
15 or
be, can you repeat that question for me, please?
yeah, our final. When will be our final?
I don't know yet. The final will be set by registrar.
Okay, and do we have any project or anything for this class?
We have any what?
Any
Sorry?
any project submission or anything?
No. You want one? I'll give you one.
No, no, I don't want it, Professor. No, I was just checking all classes project. That's why I did not see anything in yours, so that's why I was.
You got your homework that have to be completed, 2 sets of homework. That's enough, isn't it?
Oh yeah, we have so many.
You have the homework at the end of the chapter, and then you have the homework on the lab.
Yeah.
Right?
All right, Professor. Thank you so much. You have
Right
a
there.
good
Take care. Have a wonderful day.
you too. Bye-bye.
Any other questions? All right, except for Ms. Ramroop. Ms. Ramroop, you want to stay on, or you want to shoot me a Zoom request?
I can stay on. It's okay. It's just one question.
Go ahead. Because the people that are not signed off, they have their screen on and they're probably doing something else. So they may not be signed off. Now that they're listening to us, they're not.
Okay, let me just go ahead and tell you. I emailed you yesterday and I sent you a text message. I don't know if you got them. So I did not get to do the exam number 2. I was on the website all weekend doing the homework, and nothing on there said that I had the exam number 2 to do. I usually just go on and check if I have homework, and I would check announcements if we have anything to do, and nothing on there said anything. I
There
wasn't
was an
even
announcement. There was announcement sent out twice. How come you didn't get it? And
I didn't get
on my
anything.
lecture every day, I said that there's an exam.
No, so last week I was not in class because I'm actually working again.
Let me tell you something, Miss Framrope. Do not try to get me on my cell phone or any one of my cell phone that listed on my name. Okay? If you do that, I'm going to flunk you in the class. That's not a way of communicating with me.
I did it through email, and I went on the syllabus.
You
and your
need to
number
be
was
in
on
your
there.
class and get your behind and do your work. If every other student knows there's an exam, you're the only one that doesn't know that there's an exam. And this is the second time that's happening.
For me,
Yeah.
I did the first exam, Professor.
So you go back and look at the site. There are 2 postings there, 2 announcements of the exam.
Which
And at
site?
the date the exam comes, the course site, the Blackboard site.
Professor, I didn't see anything there.
You go back and look. If you don't see it, you don't need to take the exam. Because it means you're not following the course.
I have been following the course, Professor. I just started back work and I got stuck in another country. I could not get it done. And
No,
yet,
you give me 3 excuses in one. One that you
no,
didn't.
I'm telling you, okay, here's what happened, Professor. I just got back started working. I'm a flight attendant. I was on furlough. So when I finally got back, I took whatever job I could get, which is the first one is this one, to Israel. I was stuck there for 2 weeks. I had no computer. I had to use their computer in the hotel to get the homework done. I flew back on Tuesday to get back here. I did not know. If I had known, I would not have flown back on Tuesday.
Okay, who do you work with?
I work with Delta.
Delta? Okay. I'll give you makeup, but that's the only time. When you want to take the makeup?
I can do it right now. It doesn't, I have all day. I'm home now.
Okay,
Thank you so much,
what
Professor.
time? What time is it now?
11:05.
Okay, I'll set it up. Probably by 11:30 it should come on.
Thank you so much, Professor. I'm so sorry. I don't usually
Okay.
do things like this.
All right, I'll set it up. It should come on by 11:30 today.
Thank you.
Is this the only class you're taking with me, or you taking another class also?
Not with you. I'm taking 5 classes. But it's getting so much harder now because I'm back at work.
Oh, listen, everything that happened in this class, I'm mentioning it in my lecture, and it's posted on the site. There's an announcement that goes out, and an email that goes out to everyone.
Yeah, I've been trying to keep up with everything, and work just started back, and it's so much harder with 5 classes. I didn't expect them for them to call me back, and I'm so happy they did because I was out of work.
So please do not try to reach me on my cell phone. You should
I'm sorry about that. I didn't
Yeah.
know.
Okay?
I'm sorry.
That's not, cell phones are not the way to contact your professors. Unless they tell you to call them on the cell phone.
I saw it on the syllabus, and I thought it would be the easiest way to get to you.
My cell phone is not on the syllabus.
Yeah, your cell phone number is on the syllabus.
What number is on there?
It ends with 2500.
No, that's the office, your college office number.
Oh, I didn't know.
That's not my
That's
cell
on
phone
the
number.
syllabus. I'm so
Okay.
sorry.
All right, I'm going to set up your exam.
On
Okay?
Pearson, right?
It will be on the lab, yeah. Okay? Give it about at least 10 minutes and you should be able to sign on. If you don't, shoot me an email. Okay? And good luck. Take care.